People in this audience and generally begin to wonder what level of diversification they should have in the portfolio, because a few PMSs have told them that they should have concentrated portfolios of 10 to 15 stocks, and that is the way or recipe for outperformance.
It's a recipe for disaster. I just taped a program with my own team called Dhan Ki Baat, which you can see, but basically proving literally in black and white that even Mr. Buffett's concentration has not worked in the last 25 years. Initially, some might have worked. So the thing is, what we did is we looked every year at his top 10 holdings, which he reports, 10 or 50, whatever are his top holdings, which are in his annual report, and seen their performance versus his own performance. And if he had 20 or 15 stocks which are concentrated, less than 2 or 3 of them even beat the index in any one period. So what that means is that his tail did better. The stocks that were not in the top 10 did better, because it is just simply too much of a random bet that if you are concentrated, so let us say one PMS is concentrated and they have 10 stocks, and then another PMS is concentrated and they have 10 stocks. So if there are 50 people like that who have concentrated on 10 stocks each, unless some stocks are common, that means this group has collectively bet on 500 stocks. Let us say some stocks are common. So that means they are betting on 200-300 stocks. So how can they all do well? So what will happen is that the fund manager who does well will tell you his stories, and the fund manager who does badly will disappear and not be a fund manager. So this is no formula. This is a lottery. It's like I say that if you win a lottery, nobody comes and asks you, can you tell us how you chose the number? And then you'll say, I chose my birthday, and then I added my anniversary, and then I divided by 3. So everybody will say, oh, good idea, we'll also do the same. It's a lottery, and lottery is not a strategy.
What's the ideal number? I mean, what do you go with? 25, 30
we
stocks?
Go with 30 names.
30
in
stocks.
which we go 10 big names and 20 medium cap, whatever, mid cap kind of stocks. So, or new names. New means they could be large caps, but they were in trouble and are coming out. For example, if you buy Indian hotels after COVID, now you can't make it a 5-7% position because the hotel is closed. There is no vaccine. There is no idea whether India will get a vaccine. But you still feel like you're buying it for, it's a survivor, it's part of Tata, it's not leverage, whatever. You can't buy 5-7%. But that portfolio of 20 stocks, all the multi-baggers come without your knowing that these will be, but you get a slightly higher proportion than others or the market, and that is how it has been. So I have got, other than some specialty chemical guys, literally every multi-bagger of this country without knowing that it will be a multi-bagger.
But they all
by
started
buying 2%. Yeah, 2%. Whether it's Bajaj Finance, HDFC Bank, Kotak Bank, in the new life, Varun Beverages, or kuch bhi, but 2% se hota hai kaam. And then they go up whatever number of times.
What do you do when 2 becomes 10%?
No, we don't let it go to 10 because we are a fund. So new investors are coming in all the time. So 2 also doesn't mean 2, because if a stock is doing well, you can always add a little because now it's your stock. If 2 becomes 2.5 by its performance and you think everything is doing well, okay, then you add it. But day one, I'm not buying 4 of anything. That's the idea. But we won't let it go beyond 4, 5.
Okay. What do you do with some of the old stars that have always done well for you but have disappointed you for 2-3 years? Do you let them go? I'm asking for something like HDFC Bank.
No, it's still our number 1 holding, and it will not be, it will be a star, I think, starting maybe this year.
Have you already seen signs of a pickup again? I mean,
No. You see, it's a technical issue also.
Yeah.
So the thing is that, of course, it's doing well. It's growing 18-19%. And it is very, very cheap. It's 1/3 the valuation of a Bajaj Finance. But the thing is, it's a technical issue. Once HDFC Bank and HDFC merge, we expect, based on these things that people put out, that $5 billion might be the selling just from index funds. Because currently HDFC Bank is not in the index and HDFC in the index. When they combine, the whole thing will be in the index. Currently, 20% of HDFC Bank is owned by HDFC, which is counted as a foreigner owning it. Okay. Because HDFC is viewed as a foreign company. But it's not literally owned by FIIs. So that capacity will be released, you can say. So there are technical also in the case, because there's an overhang in the past 2 years, and it's not in the index, if it is removed from the index, that created extra this thing. I think it is very good.